Let's now turn to someone who's had decades of experience building businesses in China. Jack Wadsworth built Morgan Stanley Asia's business and was one of the first financiers to break into Asia in the 80s. He's now an honorary chairman of Morgan Stanley Asia and invests in Chinese startups right now through his private equity ventures. Jack, welcome back to InBusiness. Always great to talk to you.
Thank you, Margaret.
I want to start off on banking here, because news now that for the first time since I think it was 2003, Morgan Stanley, JP Morgan will be allowed to set up investment banking joint ventures in China. How significant is this?
Well, I think it's a continuation of the policies that were begun in 2003, so it's not a big breakthrough. Obviously, it's important to JP Morgan and Morgan Stanley. In Morgan Stanley's case, the timing has to do with the fact that we have recently sold our shares in CICC, our original joint venture, and that was basically required for us to get a license to do one of these new joint ventures. So, I think it's a continuation of past policies. It's not really significant as a new event.
But in terms of the access to the Chinese IPO market, some have said that the way that this joint venture is structured would be laughed off if it was in another market, but there's so much hunger to get any kind of access to China that it's an excitement.
Well, that's an understatement. We reached the conclusion in 1995 when we got our joint venture that the single largest opportunity for foreign financial services firms in the 21st century was going to be the Chinese market. And we had 35% of CICC. I always said that the only right percentage for Morgan Stanley in the Chinese market when it opens up is 100%. And what these joint ventures do, which I think is probably not well understood internationally, is that they afford the foreign firms that have them to begin to build an expertise, a staff, a presence on the ground that can be converted into a 100% owned firm when those licenses are available to foreign firms. And I've always said that that will happen when the renminbi is convertible on capital account. None of us know when that's going to be. But
a lot of people would like you to answer both questions there if you have that forecast.
Well, I think one of the significant events in the last week has been the Bank of China's permission to open renminbi accounts for American citizens in New York and Los Angeles. Hong Kong has become an experiment in foreigners owning renminbi. All these little steps, point towards a convertible renminbi. I still think it's 4 or 5 years away, but now's the time to get ready.
When you were last on the show, you told me that you thought the yuan was undervalued by about 5 to 10%, less than many estimates, which say, as much as 20% undervaluation. What do you think now, since we've seen some moves upward?
Well, I wouldn't change that prediction. I mean, I think it's a rolling kind of 12 months forward. And as I said then, it really is a function of many, many, many variables. It's like valuing a common stock. And I think the trade-weighted valuation of the renminbi, if it were, free to trade, would be not far from the current level. So 5% up in the next 12 months is not a bad prediction in my view.
So as someone who does business on the ground and has for decades there in China and in Asia, does it worry you to see the kind of rhetoric that we're hearing from Capitol Hill and congressional leaders right now? And I mean, we had top leadership not even show up at the state dinner with President Hu last night. Is that dangerous to business ventures like yours?
Well, Margaret, I've always said that the U.S.-China relationship is probably the single most important bilateral relationship in the world today. And therefore, both sides have to work very hard to make progress. There will always be detractors. There are always those who are concerned about China emerging as an important new force in the world. I think it's a given, and my view is that at the business level, relationships are great. at the political level because of the issues that are discussed there, trade and intellectual property and human rights, that sort of thing. There will be, tension and stress in the relationship. But on balance, I'm very optimistic, frankly.
One thing that you were very optimistic about last time I spoke with you, the kind of innovation you're finding in China right now and investments in startups there. You said China now is like Menlo Park in the 70s, 80s, and 90s from your perspective. There's a lot of worry about China overheating and consequently slowing down. What do you make of that?
Well, China's just reported 10% growth in the fourth quarter. Inflation is a problem. One of the things that occurs when you have a successful economic policy that fosters growth is the threat of inflation. If you look at countries like Indonesia, Thailand, Korea, their stock markets are up, their GNP is growing, and their health is causing concern about inflation and liquidity internally. I think it is the responsibility of these countries that have succeeded in getting through the financial crisis to manage their affairs well, and I think China has demonstrated the ability to do that. That's not to say there isn't risk, but that's a high-class problem. In the United States, we're worried about unemployment and low growth. I think I'd rather have their problem.
But with the companies that you're trying to foster right now, what are they experiencing with labor costs, and how are they dealing with inflation and the like? Is it hurting some of their startup efforts?
No, there's no sign of that. I think the most exciting thing in the sectors that we are active is the growth of the Chinese consumption. Which is a subject that all of the world's economists are concerned about. And we're seeing in a number of our companies, the Chinese consumer is alive and well and very active. So at that level, inflation is not a problem.
No, yeah. All right. Thank you very much.